Hi everybody, this is Gabriel with the fifth video in this series. Till now, I guess you already had some aha moments. Now let's have a look at real life trade examples. You will then much better understand the story that the parents tell. And what follows is an excerpt from a recent trader chat between RJ and me. And that's my master's class of students, basically, where we share trade ideas. Patterns are actually telling the story. That was in June 2019, where on the monthly chart, gold delivered a very strong long signal on system S2 when gold was trading at 1,400. And we discussed that in the group because it was kind of counterintuitive. In this case, the dollar was getting stronger and stronger. How can it be that gold is going to deliver long when the dollar is getting stronger and stronger? In April this year, another signal on silver, and this time on System 1, the weekly. Well, that basically confirmed. And then in July, it was the 21st of July, a euro dollar long. Suddenly, for the dollar actually getting weaker, a long-term dollar weakness signal. The precious metals that have already developed nicely to catch fire. Gold broke the 2000 level, made a new high, and silver basically doubled within a very short time. Well, by the way, we got a Bitcoin long signal in July, and I think there's a lot of potential for Bitcoin to go higher. Hard to believe, but we'll see.
I think Van's probably in general agreement with you on that. I don't know if he's got a price target in mind, but he has very strong beliefs about Bitcoin going much higher.
I just wanted to show you a couple of slides. Let's start here with the euro dollar. So this is the euro dollar, the monthly chart. So as I mentioned, if the euro dollar goes down, this means that the dollar gets stronger and stronger against the euro. And this downtrend started during the great financial crisis, 2008. So that's 12 years, right? I thought the dollar is getting stronger and stronger, and will actually break the par level here, going well below. Well, I had to change this belief recently, and I've created a video. I'm going to attach that. It was basically right here. And this is a pattern. Well, this should have followed through on the downside. It failed, right? Whenever a pattern doesn't show follow through, it's a counter trend signal. It's an important thing here happening. It would have been really easy for those bears to run a couple of stop run levels here and to actually break at the par level. But this didn't happen. A long-term bull signal that occurred on the 21st of July. And we could actually see precious metals caught fire. That's a silver chart, 60-minute, 240, daily and weekly. This was widely discussed in the master's class. We were already positioned along on the 60-minute chart here based on System 1. This bull signal on the dollar came actually in on the 21st. This is here, and we can see how that had an accelerating impact on the silver chart. In addition to that, on the weekly, we can see it. The trade was taken right here. Well, these are stop run levels. So we've got two factors. One is stop run levels that benefit the bulls, and the dollar that has generated a signal telling me that there's going to be a push into dollar weakness, which it should increase precious metals. Let's just have a look what happened. So this is the pattern. That's again the weekly chart. The pattern occurred here. This is what we saw within just 2 weeks. This is a slingshot move, right? And a slingshot move cuts through stop run levels like a knife through butter. This is the power of the system. This generated a big R multiple. This is not where silver ended. Silver actually continued up to the $29 level. I think this is just the start of a very early uptrend in precious metals, of a long-term bull trend and dollar weakness for the next 10, 15 years.
It might be helpful just for people who are not familiar with the term. How do you explain a stop run level? Just real quickly, briefly.
Stop run level are obvious levels that a lot of people see. So it's this one, it's this wick high, these highs that are clustered like in cascading manner. It's a little bit like dominoes. So as we come from below, well, these levels are levels where people have stops. And these are as well levels for buy orders. So whenever a stop gets executed, well, that's nothing else than a buy order, right? So as we break these levels, there's actually a lot of buy orders entering the market, and this drives prices higher. And as prices get driven higher, well, the next level comes into place. Well, prices get driven higher, 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 and it's kind of a domino effect.
It's obvious in that chart, yeah.
Yeah. And the strength basically comes out of the consolidation pattern. And this gives like the confidence to the pattern trader that these levels, which are levels of resistance, these levels will be broken because we are in a strong bull position. I'm sure you like these real market live examples. Following this link, and you get a sneak preview into our last Masters class review call, where we talked about pyramiding into this precious metal bull run, then how to hedge the achieved profits, and then to benefit from a dead cat bounce. See you for the next and last video of this free futures webinars series. Thank you and bye-bye.